Hello guys, in this video I'm going to be just taking you through a very simple way of calculating lot sizes for trades. Very simple, doesn't involve too much complicated maths, and you can do it. Everybody can do it. It's elementary maths. Okay, so let's go. And this is important because a lot of new traders miss this point, and I'll show you why. Okay. So let's take a buy situation, and if you remember, a buy situation is a case where we know our buy entry price. So in this example here, the buy entry price is 1.3467, and our stop loss is meant to be below the entry price. So in this case, the stop loss is 1.3432, which is 35 pips from the entry. And how do we get that? So how do we get the 35 pips? It is 1.3467, 1.3467, take away the stop loss price, which is 1.3432, which will give us 0.0035. So that is the 35 pips for decimal places. And then the take profit, or the target, is and must be above the entry price for a buy situation, because if it's a buy situation, you're expecting to take profit from a price higher than the entry, and the stop loss should be somewhere below so you can get out without hitting too much loss. Yeah, and so that's 35 pips, and the same thing we will do for the target price. Okay, now let's just assume we have an account, a $2,000 account, and we want to risk 1% of our account size per trade. Now 1% of our account size is $20. So if I take $2,000 and I want to get 1% of that, I just multiply by 1 equal to, and I divide by 100 to get the percent, and that will give me 20, and that's the answer there, $20. Now the simple formula for calculating lot size is the risk in dollars. So in currency, not in percent, the risk in dollars, which is this, which we calculated from doing 1% of the account size. The risk divided by this stop loss, in this case the stop loss level here, which is 35 pips. So it is the stop loss pips, not the stop loss price. The number of pips from the entry is what we're trying to get here. So in this case it is 35, and multiply that by the pip value. So this pip value here is the pip value of one standard lot. Now I'll tell you where to get these figures, these known figures, and I'll show you how to get it. So the link is here. If you just go to this link, it will take you to a list of pip values, and that's updated regularly. So you want to bookmark that page. So that's the page here, pip value. So that's it here. Now on this page, you want to make sure you have this as 100,000, which is 100,000 units, meaning one standard lot. That's the figure I want. So I want to know the pip value at one standard lot. So let's take, for example, Euro USD. We want to get the USD figure. If our account is in USD, then that's the pip value. If our account is in Euro, that's the pip value. If our account is in GBP, that's the pip value. But let's just use a USD account, and let's go to Euro USD. So Euro USD, you can see that the pip value here is 10. If it's GBP USD, scroll down and find GBP USD, and it's 10. If it's AUD USD we want, you can also go there and you can see AUD USD is 10. If we want Euro AUD, you can see it's 6.74. So the figures are there. That's all you need to do. If you want, you can just go Euro USD, and you can see you have the figure there. You want USD JPY, you can see the figure is there. So it's easy. Just take note of this page and bookmark it on your web browser. Okay, so back to the presentation. So for us to then calculate this, if we then go risk in dollars over stop loss in pips times the pip value. And if we're using AUD, Euro USD as an example, so this risk in dollars will be 20. So 20 over 35 pips times 10 pip value that we just saw now for Euro USD. And so that would then give us 0.056. But remember, pips lot size is only in 2 decimal places. So if we're going to get the 2 decimal place for this, it will be 0.06. So this will be our lot size for that trade. Yeah, and that means that if you lost that trade at 35 pips, you will only lose 1% of your account. It's important you know this. Now let's go to a sell situation. So similar arrangement. In this case, the sell entry price is there, and for a sell price, the stop loss should be above the entry. And in this case, the stop loss price is 40 pips, which is 1.5290 minus 1.5250, and that gives you 40 pips. And the take profit will be below, and in this case we're using a 60 pip take profit, and then that will give us 1.5190. So if we did the same calculation here, again, if we maintain the 1% per trade, that will still give us $20. So if we plug in $20 into this, 20 over 40 pips, which is the risk, times 10, which is the pip value, and that would then give us 0.05. so the lot size is 0.05. okay, now this is the important bit that I want you to take note of. So we have just done this, taking an example of Euro USD $2,000 account size. 1% of the risk will be $20, and if we had a stop loss of 35, pip value of 10, the lot size will be 0.06. If we had an account size of $7,400 and we have a GBP NZD opportunity, and we choose in this case to risk 3% of our account, for whatever reason we choose to risk 3% of our account, that is equivalent to 222. So if you take 7400 times 3 equal to that divided by 100, that will give us 222. So that's $222 will be the risk in this case. And if we had a stop loss of 70 pips, you can see 70 pips, and in this case GBP NZD 6.31. let's see whether that's true. GBP NZD, and the pip value is 6.31. So 6.31 and a stop loss of 70. So the lot size for that trade will then be what? It will be 222, which is the risk. 222. Now, first of all, let's do remember the formula is the risk over stop loss pips times pip value. So let's do this first. The stop loss times pip value. So that will be stop loss 70 times pip value of 6.31. That will give us what? 441.7. So if we note that, 441.7, and then we want to divide 222 by 441.7. 222 divided by 441.7, and that will give us 0.502, which is 0.5. that is a mini lot, 0.5 5 mini lots. Okay, so that's clear, right? Now here comes the interesting bit for traders who start with very small accounts. It's not a problem to start with a small account. You just need to realize certain things about small accounts. AUD USD, if we want to trade in, and we have $100 in the account, 1% of $100 is $1. If we maintain the stop loss of 35 pips for an opportunity, the pip value is 10. If you did that maths, it will be 0.003. So 2 decimal places means that you cannot take this trade because the least lot size you can have is 0.01. So you cannot take, and this 3 is not enough to make it a 0.01. So you cannot take that trade at 1%. So the other option is to reduce this number of pips. But if you reduce that, it means that you are increasing your potential for loss as well. So either way, because it's a small account, you have to risk more. So it is only after you have taken risk a trade of 4%, where the risk is $4, that you can only do 0.01. So even if you reduce these pips, the stop loss pips, to a smaller size, you're increasing your likelihood of having a loss. But then if you want to maintain the likelihood of profitability, you will have to increase the risk per trade to be able to take a trade, and so that's 4%. Yeah, I hope that makes sense. So for a small account, these are the challenges you face. It doesn't mean it's a bad thing in itself, but you just need to be aware of that. So if you're losing 4% every trade, you will probably run out quicker than someone losing, not probably, you will run out quicker than somebody who is losing only 1% per trade, as it were. So I hope that makes sense. Let's just go to the chart and just do an example. So if we take this chart here now, this is Euro GBP. Euro GBP, in this case, I want to take a trade. So I want to take, in this case, a sell trade. So I want to enter. So let's say my entry price is here. Yeah. And then my stop loss is just at the 89 moving average. So 89 moving average just there. So let's change that color to red to just make it different. Change that to red. And then my take profit, I want my take profit to be somewhere more than the stop loss. So around here, and let me change that color to, say, blue. No, blue. Okay, let's make this a green. Just keep things consistent. Okay, so that's my entry price. Is a sell entry, so I'm expecting price to move downwards. So that's my sell price, that's my stop loss, and that's my take profit. So to calculate my stop loss, it will be this distance from here to here, and you can do it by taking your crosshair here, Control F, and you come down here and you get to your entry, click, hold, and then just drag it to that point there, to the same price. And you can see it says 143, but that is 14.3 pips in this case, right? 14.3 pips is the stop loss, so let's note that down. 14.3 pips, and the take profit, same thing, will be 20.2. Take profit is 20.2. And so to calculate our lot size for this trade, remember the formula is lot size equal to risk in dollars or in the currency over stop loss pips times pip value. So if I took this and I go lot size equal to risk in dollars divided by stop loss in pips times pip value, and I want to make that really big so everybody can see it, and we just want to make it black. Boom. So stop loss lot size will be equal to risk in dollars divided by stop loss in pips times. So in this case then we can let's assume that this account size is $500. So if I want to risk only 1% of my trade on the 1% of my account on that trade, and the account size is 500, so it will be 500 times 1 divided by 100. So that means my risk is $5, right? So we can replace this now. We can replace this now to $5. $5, and the stop loss, if you remember, we said was 14.3, and the pip value for Euro GBP, pip value for Euro GBP is 12.6. So to be this times 12.6, and that will be equivalent to, so this whole thing would then be equivalent to, so 14.3 times 12.6 will give us 180.18. 180.18. And if we then do 5 divided by 180.18, that will give us 0.027. Now 0.027 in 2 decimal places will be 0.03. So then the lot size for this trade will be 0.03. So if you go here, new order, you want it to be a sell, is a sell instant order, and you want to take 0.03. remember, it is 0.03. 0.03 is the volume, and here you can set your stop loss, which in this case is 0.90499, and the take profit will be 0.90152. And that's it, and you can just go sell. The market is closed now, but you can just go sell, and that's it. And if market is open, we would have had the trade enter. Okay, that's an example. If you have any questions, please do come back to me, and I will support you with that. All right, until next time, you take care, and let's stay disciplined. Cheers.